This is sad. Mic check, mic check, mic check, and now maybe I was supposed to click that. Still nothing now. The stuff I need to tell you guys. To stream. Mic check, mic check. I'm pretty sure this is it. Mic check, mic check. This is crazy. This is crazy. Can you guys hear me? Can anyone hear me? Please confirm. And now, ooh, what a waste of time. Mic check, mic check. Yeah, okay, cool, cool. All right, so you can hear me now. So I think I know what happened. Ah, man, fantastic. Guys, I'm so sorry, man. At least you guys didn't disappear, so I appreciate that. But goodness gracious, I'm gonna be destroyed for how the first 10 minutes of this video has no audio. Man, I was like talking my bum off earlier on. Right, so mic check, mic check. You guys can hear me. Fantastic. Thank you for sticking around. Sorry about that. Glad you can all hear me, right? Glad you can all hear me, right? So, okay, fine. Note to self, double check your sound all the time. Right, so I'll start again, guys. I'll start again. So number one, I want us to talk about a lot of things in the markets. I think you guys can see by the title of the video, the assets. I kind of just did a brief introduction of what I want to do. And then I said, I asked you guys to kind of like take the time to study this chart. This is a U.S. government bonds chart, all right, the 10-year yield U.S. government bond chart. I'm just going to quickly put on my earphones. So can I just do one more mic check, please? All right, can you guys still hear me? Oops. Can you guys still hear me? I'm just doing one more mic check. I've just changed one small adjustment just so I feel comfortable with the sound quality as well. Can you guys hear me before I continue, or has whatever I've done affected the sound? I'm so sorry about this. Can you still hear me? Yes. All right. Fine. Thanks, David. Fantastic. Thanks, David. All right. Cool. So this is a 10-year government bonds, guys. And when I say study the charts, this is what I am literally referring to. I want you to do what we did in module 1, the exact same way I taught you in the course, where you take an asset and you don't know it from a bar of soap and you form a relationship with the asset, major turning points. You mark out all these key levels, find out the profile of the asset, find out the dips, find out if there's any significant amount of information you can get from the governing perspective, just like we've done countless number of times. It's absolutely crucial that you do this for this particular chart. Now, there are different treasury bonds. There's 2-year, 5-year, and this is the 10-year yield. I like the 10-year yield because it gives me the best long-term perspective, and markets move, always in line with the long-term perspective. So when I start to think market crash, which I've been very consistent about since January, when I start to think about bear markets in Bitcoin, I run to this chart just to make sure, I'm not crazy. So there's not much to see except for the fact that one would argue that this has been in a downward trend, since, goodness gracious, 1980. All right. Now, I could walk you through some cool socioeconomic history. I can tell you that in the 1980s, there was a crazy president in the United States who was the front runner of what is called neoliberalism. Neoliberalism was linked to rapid capitalism. Rapid capitalism, was basically the backbone of things like the financial markets, the stock market. Even though the stock market had been there long before neoliberalism and capitalism had been around for almost 200 years, that this time period, the 1980s, the advancement of capitalism into neoliberalism, which really speaks to economic policies, right? A lot of cool, not let me not say cool, a lot of disastrous things actually, personally, I believe, happen in the world, especially when you look at Africa, right? Africa's problems begin way before that with slavery and colonialism, but are extremely exacerbated with neoliberalism. And we see a lot of that in the 1980s. So when other countries have been independent, like Zimbabwe in the 1980s, South Africa in 1992, 93, 94, I forget, somewhere there, right? We were being colonially liberated, but we are inheriting a specific mode of operandi within capitalism, which is neoliberalism, right? So that's one very important point. And if you look at the US Treasury yield since the 1980s, this thing has just been in a long-term downtrend, right? Because there were many vehicles, many assets, many things to put your money in, many new developments. If you look at the 1980s, a decade after that in the 1990s is the internet. So there was stock, the internet boom. There were a lot of fascinating places to put money. One of them will always be Nasdaq. The other one, popular, very popular, SP 500, which has almost guaranteed you 14 to 15% of your money every single year. Imagine investing into that asset for 10 years. That's massive compound gains that your bank can't give you. So when I look at a chart like this, which is the US Treasury yield, I see a sell profile asset. I see a sell profile asset which at the brink of a big crisis, which was COVID, right here. February 2020, the oil chart basically looks like this at this moment, just this big V-shaped recovery, right? I see basically the 10-year yield did not know how to react to COVID and essentially broke out of this channel, right? So there was a deeper dive. Price really plunged to the downside. But then its character to me changed. When did it change? In March. It's now, if you've been with me for a very long time and you've been following my war rooms and you've taken my classes, you know that all risk sensitive assets in the markets, euro, Bitcoin, Nasdaq, AUD, NZD, pound, all of them correct in March 2020. The moment COVID is finally has a plan, pharmaceutical industries create projects and leading pharmaceutical industries run the race to create vaccines, the market stops dropping. The market goes, finally, there's some certainty in the markets. Finally, there's a little bit of an eradication of fear in the markets, right? So that's essentially what's happening at that particular time period. I thought it interesting that the US government bonds also recovers around about the exact same time in March. Fine. We don't judge assets by how they fall, no, by how they recover. We judge them by the trends they create and how long they maintain them. So I expected that during this time when markets made contact with a very valid supply that I've highlighted there, and maybe let me do a good job of making sure you guys can see my charts clearly today, given we already started off the stream with audio problems. You would think after the literally I've given about, apparently, according to my team anyway, 700 lectures across the spectrum, corporates, senior traders, the education group, and the free war rooms between 2020 and this year. You'd think I've become a pro at these Zooms and stuff, and still today I had an audio problem. Right, so look at this. Price comes into as a very, very valid supply. Not just a valid supply, it's the COVID supply. What I like about the markets is the markets are telling, right? You can pretend you don't know. You can act it's conspiracy theory. You can do whatever you want. But there was a bearish engulfing candle in January, right? COVID becomes a real phenomenon in February, but I don't even want to get into that stuff, right? So markets make contact with this supply March 2021. Now, 365 traders, the rest might not know, but we know without a shadow of a doubt, banks think in 3 months, take profit in 1 year, in a 10-year plan. The recovery starts in March 2020, and then price gets a profit. This is profit taking. Why is this profit taking? Well, first of all, we've done a 4-year run, number one. Number two, the best place to take profits if you're a buyer is a supply. I'm just doing the basic technical analysis stuff, but I feel like there's a need for those of us in the education group to become better storytellers with what price is doing, because the more you train yourself to understand what price is telling you, the quicker you are at predicting, or at least speculating, right, where price is going. Now, markets rally into this area on March 2021. So there is the 1-year profit taking. And this is a strong supply. I don't think I would have been crazy to expect price to drop all the way down there. It's a good demand and it's a strong rally. It's a strong supply, but price did do an arrow effect bounce and then stopped somewhere there. So that got me interested as I was watching these developments over time, right? I didn't do anything about it. I was just observing, like, okay, fine. Then I drew a nice big Fibonacci from bottom up to bottom down, and you see markets again could have tagged this area. This is our golden ratio area, but instead they take, I've removed them from my fib because they just noise to me. I no longer trade PCP levels, but somewhere in here is 23 comma something percent, and somewhere in here is at 38 comma something percent. So this is a normal retracement zone for price to continue to the upside, which means this V-shaped recovery on the US 10-year plan, on the US bonds, right, is quite strong. Now, bonds in America, and just so we're all clear, because we're looking at the US 10-year bonds, have a better guarantee and they pay so much better, right? So not so much better, but it's not as risky as investing in the stock market or as risky as investing in the crypto market. Now, for the last 2 past war rooms, and you can check because I did last night to see if I actually mentioned it, and I did. I kept telling you guys that crypto is going to start to fall surely, and stock markets, because as long as this is giving back the investor return on yield, see there, we've just crossed over 2%. Right, an investor is guaranteed that there's a lot of money that they're going to get back on their investment, and it's a sure given. In cryptocurrency, we could go to 100K. Yes, we could also go to 20K. No, right, the gap between 100K and 20K is what we're referring to as some type of volatility, market uncertainty, but here you're guaranteed return on investments on a consistent basis. Might not be as ridiculous as crypto, but it is certain, stable, and over time you make a whole lot of money. So what happens is there's always what we call a change of hands, or what I call David, why did you stop trading PCPs? Because of my schedule, David. I'm very busy with the academy, but also corporate stuff keeps me very busy, buddy. So what happens is PCPs need you to literally always be watching your screen, because it's just a touch and go. I mean, this is obviously a big time frame, right? Monthly. But literally from a monthly perspective, as a swing to positional trader, I would want the monthly supply to a monthly demand and not necessarily a PCP level, because I wouldn't know it's going to happen until it does, unless I always have my fib levels on this chart. So if price hit this supply in March 2021, this is what I would be looking at. All right, it's a very good question. I appreciate that. This is what I'll be looking at. So I wouldn't know. I mean, when you're looking at this chart right now, and we're to do a war room about it today, I'd be like, okay, guys, let's sell until here. That's what I would say in a war room, right? Not knowing that price might decide to just turn somewhere here at a PCP level, right? So naturally, you'd want to have your tools out to almost predict that or take profit. But again, this is a higher time frame. So on a smaller time frame, it'll be much more easier. But for me, I generally miss all those PCP levels because I'm always busy. I'm just like, I like set and forget. And because I use set and forget as a trading style, in line with my trading strategy, which is supply and demand, I never go for PCPs. I just go for golden ratio because I can get triggered anytime. But if I was an intraday trader, I would use the PCPs. There's nothing wrong with them. I've back tested them. They work just fine. But my style of trading doesn't allow. I hope that's clear. Right. So back to what I was saying, guys. So in the last two war rooms, I keep saying that now there's something called change of hands, where you must start to think as a billionaire. Even if you don't have it, just think like a billionaire, right? Essentially. And as a billionaire, what you want to do is to always move money around where you get the least risk and the most reward. Least risk, most reward. And what happens is billionaires, banks, institutions, hedge funds, millionaires, 365 students, and across the board, right? Investors in general, whatever strategy you're using, that's kind of like your job. Your job is to grow your money. Now, when that happens, you have to take money out of an asset and put it into another asset. When you automatically remove money from the crypto space or the stock space, it triggers selling, right? It just automatically. When you take profit as a bank, it triggers selling, because while these guys sold here simply because we reached the supply, retail traders, let's say this was a forex, a forex chart, retail traders would have seen that as confirmation that it's now time to sell, as confirmation that we've now got a bear market, and so selling continues and they get birds, they become liquidity. That's one of the main effects behind profit taking, right? The other effect is when you take profits or you move money out of one vehicle, let's call this a Bitcoin vehicle, and this is the stock market, aka Nasdaq or Dow Jones, whatever you're looking at, and you start to put money here, naturally the impact, right, for those other vehicles that you're removing money from start to slow down, right? They start to tank, because remember, guys, the reason why we trade supply and demand is because supply and demand tracks the actual monetary value behind price movement, behind price action. We're not selling because of a resistance or a psychological level, just purely we are buying or selling because that is where the money is edged towards. And where there is money, there is movement, period. So when you remove money from an asset to put into another asset, the asset that you're putting money into rises, and where you remove money, that asset falls. All right, I'm going somewhere with this. Just please stick with me. Now, the treasury yield has seen an incredible recovery. Once again, this is the exact same asset that we drew a channel for, and that channel indicated, or at least highlighted, that there might be serious long-term problems, right? That a lot of people were not entirely excited about putting money here. It wasn't giving out much. It wasn't giving the best yield, and then all of a sudden this happened. Why did this happen? QE covered it in different war rooms, won't waste time. Printing of money, COVID checks, etc. People have extra cash. Whenever you give people extra cash, people spend, they buy new iPhones, new Tesla cars, but they also invest and start to take bigger, bolder risks in the market to make more money. And that's what we saw. So money started to pour into this little thing, which is quite smart, because it's the US government printing money and money is coming back into the US government, right? But we'll talk about all these economic models another time. Now, the impact of this, I'm going to move on now to the Bitcoin chart, because I really wanted to explain why the US Treasury chart is actually quite important, is that we are starting to see price slowly but surely leave. Now, I'm going to go straight to the daily chart on Bitcoin. Right, and we spoke about these levels. I was quite clear last week. I said, guys, I'm not buying. Right, I remember I was very clear. I said, I'm not buying. I don't trust it. I said I don't trust it. And when at the time that I said that, I actually was more curious of price turning here. All right. And I think at that time I was so fixated with making sure that the head trader of 365 definitely communicates clearly that he's not jumping in a buy trade. I can't tell you what to do, but it's absolutely important that I just give you my thoughts around me, right? And I showed you guys the weekly chart. There was an institutional supply, and I almost kind of like ignored the sell high factor, right? So obviously, if there's a supply here and the distance between the next supply is there, price will always rally to the highest supply. And that's what happened, right? Just textbook module 1 stuff, right? So now Bitcoin is falling. And I think that's quite interesting. The yields have, just about 4 days ago crossed over 2%. Bitcoin, slowly but surely starting to drop. If we go to the H4 time frame, there is a desperate Talita area, acting as an interesting line of defense. And if this gets broken, which I think it will, all right, personally, I'm not gonna take a buy here. I think this PCP will get broken. And then we're looking for some interesting action to the 37,000, 38,000. And the question is, will the whales save Bitcoin from falling? My personal answer is I hope they don't. I've been also very clear about this. I am a staunch crypto guy. I believe crypto is the future, but I think for it to fundamentally shape the world, it needs to do what every other asset has done in the past to shape the world, which is to go back in time and really only move forward with real believers. Real believers are buy lows. Real believers are what we call early adoption. Right now, because we wasted 10 minutes, I wasted 10 minutes trying to get sound across to you guys. I can't speak too long about what's in front of you right now, right? But if you look at the supply of Bitcoin, and I've talked about this many times, we're about almost 19 million crypto coins are in circulating. They're in the circulating supply. So I don't know if you guys can see, it says the orange line, this long orange line here is circulating supply. And in terms of miners, we've got 18,923,725,000 Bitcoins that are now out there, right? Bitcoins that are now out there. And as far as I know, there's about 21 million in total, and then Bitcoin is done. So a big dip, in my humble opinion, needs to happen, right? So that those who need to jump in get the last trip to the train. It doesn't necessarily have to go according to Leroy, right? I agree with that notion, but it definitely is a big possibility, because there's really no way we can pump all the way to 200, 300. As someone even said one day, in 10 years time, crypto might be worth about $1 million per coin. I believe all of that. I believe in the 10-year model, but I think we need to remind ourselves of the fact that we do have order blocks and order flows that are fresh and completely neglected at the bottom. Now, when you look at the historical chart of Bitcoin, and I'm going to go all the way back to 2011, August, September 2011. I mean, it just depends on which chart you use, but most of them started off back then. We can see that in general, with the exception of one, and this is a PCP, with the exception of one, that every time price created an order block, price came back for the order block. Every time price created an order block, price came back for the order block. With the 2013 crash, right, and I don't know if you guys know about the 4-year cycles, price came back to the order block. Then price left, and then price get another 2017 big crash, a big basis. This is the recovery in May. Price came back to the order blocks. This rally, right, if you study this rally, specifically on the governing time frame as quickly as possible, you will realize that if you follow the module 1 rules, a lot of these order blocks are just minor traps, right? You don't get the imbalance rule met here, right? No clean imbalance. Imbalance being volume-based candlesticks, 3 candlestick rule, whatever it is. If I've taught you before, you would know. And then you get another attempt at a rally where that creates a doji, perspective with 365 candle, and then another Talitha area is formed here in this particular area. This is me back testing. This is me making sure I'm not crazy, right? And when you look at this quite carefully, just to move this around, this is one of the few times where price actually rallied in 2017, and this was that parabolic move that saw Bitcoin touch 20,000. It was the first time the whole world was like, damn, all right, this thing is for real, right? When it came into 20,000 in 2017, right? And so this order block, sure, one could make the argument that it's definitely crying, but I definitely don't see price coming there ever, right? Because of it was part of the parabolic structure. When you get a parabolic structure like this, you need a correction. You need a market correction, and we got one here into an immediate area of value where price danced in 2018, price read it back to a supply, price came back for us in COVID, and then we got another parabolic structure, right? So this is the nature of Bitcoin, long-term perspective. This is another strong parabolic. And if you just look at this, right, markets need to create a supply, number one. If you're looking at the first phase of the biggest parabolic stuff, and stop me if I'm going too fast there in the live chat. Let me know if I need to slow down. Let me know if I need to re-explain stuff with you, because today's war room is special. I'm just teaching, and then tomorrow, and a little bit in the last 30 minutes, we'll look at a couple of charts, and then tomorrow I can just fly through signals, right? I really want to get this word out. If you look at this time period in the markets, right, for markets to base themselves, markets where it's basically like trying to advertise yourself here. We had to get more early adopters. There was not even a case for institutional inflow here at this point in time. It's just us retail traders, people like me, people who are bigger than me, begging everybody to get in here, get in there, get in wherever you can. Right now, we've had another, man, just remove this tool. I like using the brush so much, but then it becomes such a massive distraction. So now we've had another parabolic run here on Bitcoin, another parabolic run. And in my mind, we need the similar thing. We need this box range. Whether it takes 2 years or 1 year, things are going to happen a little bit quicker at the top now. We need something similar. We need a supply, right? We got something similar here. It is not the best supply. And then B, we need a strong demand at the bottom to catch price, just like we had there. And then we need price to decide if that's going to be a good landing zone. Now, one would argue that this bullish engulfment pattern here of June 2021, which was last year, is that monthly governing demand, right? It is that base to catch price. So you could do something like this, right? So I've seen this argument. I hear it all the time in the senior traders war room, yada, 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 yada. Everybody loves it. Everybody wants it. And the reason why most staunch crypto people want this is because nobody wants to see their portfolio down 80%. Unless you're a psychopath like Leroy, I don't care about 80%. Because I'm judging from where I am in my life as a human being, in my personal life, I have no need for Bitcoin to make me $1 billion today. I've got everything that I need right now in my life, okay? Number one, I would love Bitcoin to pump, but I'm thinking in the next 10 years, right? My crypto portfolio fundamentally is my children's inheritance. I don't see me and my partner, chasing massive. We are very comfortable. We're very happy. Long story short. So those people who jumped in late, and when I say late, guys, I'm saying relatively late to those people who jumped in 2017. We are still very much in the early stage of crypto adoption. So you're not late. If you haven't jumped in, jump in now. You're not yet late. But remember, there's a ticking time bomb. There is only 21 million coins that are going to circulate in this market. And we have got basically 19 million done, right? Basically 19 million, right? So maybe in the next 2 to 3 years, we'll be done. We'll catch up with this number, and then there'll be no more Bitcoin coins circulating the market, and holders. I think I taught on this in the last war room. When supply is limited, when you have limited supply of anything, the price of that thing goes up immediately. When the supply is limited, the price goes up. When the supply is plentiful, the price goes down. The demand is, the value of that asset is not perceived as worth the while. So the fact that Bitcoin has a cap, if you come to CoinGecko, how do you spell this thing? There we go. CoinGecko. Yeah. If you come to CoinGecko, I'm pretty sure it's 21 million. I'm just rambling a lot of stuff today, but I don't know where to put it, and I don't want to write on it. Right? So there's Bitcoin market cap. So we've just dropped just a little bit, right? Volume, price. We'll talk about this as well. Ethereum's market cap is almost half of Bitcoin. So, 2x, 3x is very possible. We'll talk about the top 10 crypto coins this coming week. I want to do a crypto week because I really feel like I do a lot of crypto stuff by myself, but hardly ever talk about it on the channel, right? But Bitcoin is still at the top for its store value, right? So that's kind of like what is good, right? But there it is, there's circulating supply. 18.95. So very close to 9 million. But total supply is this number here, 21. So you should be not in a panic, but this is the number you're looking for. The closer we get to this number, all right, right. And if you look at this properly, right, the more supply, the more circulating supply, right, keeps going up, the higher the price goes, because we're getting to a point where there is less cryptocurrency in the markets, right? Specifically Bitcoin. But more importantly, it means for you that the day you decide to wake up and start dollar cost averaging to buying as much Bitcoin as you can, right, you're going to get it for a terrible price. Number one. Number two, you can't use it as an emergency fund. Right, you'll never be wealthy. You just have to make another plan. And I sound rough because I don't even know what your emergencies are in life, but you can't spend your Bitcoin. Never spend your Bitcoin. Make another plan. Hold that thing for 5 to 6 to 7 to 10 years. You'll thank me later. And in that time period while you're holding, please, 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 please keep buying. Absolutely keep buying, because it is absolutely crucial, absolutely crucial that you maintain the course. Now, I don't think there's a demand here. I believe there's a demand. I don't want it to hold. I think that's the correct way to phrase it. I don't want the demand here to hold. All right. I do not want the demand here, this one here, to hold. And when I look at the weekly time frame, I noticed that price a while back stabbed it, and price, made a run-in, stabbed it, put a bandage, created another demand, and price is going, then price rallied up, and we are slowly but surely coming down. Now, write this down or remember it. Bitcoin is in a bullish market. No matter what the headlines tell you, as long as we are above 28,500 US dollars, we are technically still bullish. We'll have a bear cycle in this bullish market, but as long as all the corrections in the market happen above 28,500 US dollars, we are technically extremely bullishy. All right. A lot of crypto people, I'm pretty sure, I'm just judging from the meetings I had yesterday and a little bit last night with my senior traders and 2 actual funds. It is absolutely crucial to take note that this is going to change. All right. It is. I think it could change. Now, if prices to drop below 28,500, there is a very, 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 very high chance that full bear markets are going forth, and then the calls that are making 12,000, etc., where price can first come back to 20,000. I've said this before. If that holds, it holds. But this would be a nice part for Bitcoin to come really correct. And after price comes back here, I can guarantee that it will never come back down again. Right? Will it come down there? I don't know. Whew. Now, yesterday, I finally got word that there is what is called an emergency Fed meeting happening on Valentine's Day. All right, there is an emergency Fed meeting. There is an emergency Fed meeting happening tomorrow, Valentine's Day. Guys, the last time there was an out of the ordinary closed Fed meeting was 7 years ago in 2015. So that got me thinking, because I've been that guy who keeps saying market crashes are coming, market crashes coming, market crashes coming. Now, if the Fed is worried, so do I have all my tabs open? No, I don't. Let's go back to what happened this week. You guys want more stuff on the channel? You must just tell me. I can cover new stuff. I'm always in the office looking at charts. But if you notice, on Thursday we had this, right, with the CPI data. All right, and CPI went above, and this was easy to predict. This was not like rocket science. CPI went above normal, because we saw with the previous week NFP, we had more jobs in the market, and we saw that the wages went up. So when you go through NFP month to month, you have to train yourself every year now to look at average earnings. So if you think about it this way, more people got into the job market, but also there was an increment in wages, and I explained why. Feds are fighting the inflation crisis. Feds are trying to control inflation, because if you don't control inflation, prices go up. When your prices go up and consumers can't afford, you get a massive recession. So you have two big options as the Fed. The Fed has started adjusting its monetary policy to fixing the economy, which was broken, figuratively by COVID and Trump and whatever, and the printing of money, right? They're trying to fix that by tapering. Now, if these readings keep showing up that wages are going up because prices are going up, and then your CPI data, which came out on Thursday, comes to double, triple confirm that, look, man, prices are definitely going up because your consumer index, is higher than expected. The Fed, to me, might slowly start in a panic. Now, it took me a while to find the data, but when in 2015, 7 years ago, when there was an emergency, Fed meeting, they immediately increased rates. They went straight for rate hikes. Why is this important? Because in November, we were not going to increase any rates because we're tapering, right? And remember, I'll always be here to give you guys the fundamental breakdown. It's very difficult to trade these type of fundamentals, so you stick to supply and demand. I'm just giving you the whole story. I'm just giving you the big picture and how I'm moving my portfolio and how I'm advising my corporate clients to move their portfolios, and it might help your individual investing and trading as we go about. But when you taper, guys, you can't do both. You can't increase interest rates and also taper, right? It's just overkill, right? But recently now in the January FOMC meeting, FOMC said, look, man, something might happen on the 16th of March of 2022. And I assumed, okay, fine, tapering would have happened quite a bit. They would have stopped printing a lot of money. They would have reduced that stuff for a bit. And so there's a high potential that when it comes to the 16th of March, we might actually find our first interest rate hike. Now, all of a sudden, it's a closed meeting, by the way. It's not even an open meeting. So let me just type here, closed Fed meeting. There we go. Thank you, Google. All right, it's a close. So we might not even get the transcripts. We might not get the transcripts of this meeting. We'll not know who said what was the vote, because the federal chair has to vote. So maybe there are 8 of them. And then if there's a vote, what's the majority out of 8? So 5 people have to say yes to increasing rates immediately, and then it's done. That's just how the vote operates. So it is a close, it's a closed meeting. So we'll never know what was discussed until they announce it on time. Now, if they increase interest rates on Monday, if on Monday they decide and they agree that, look, man, inflation is no longer transitory, which it's not. Inflation is a big problem, which it is. And the only way to fix that problem is to increase interest rates. My assessment, looking at that 10-year yield chart that I just showed you right now and the Bitcoin chart that we're looking at, and I like the daily picture for more perspective. My understanding is, if I understand how markets mechanisms work, is that is going to be a terribly bearish signal for crypto. Because if you increase rates, you strengthen the country's currency. The dollar is not just a dollar. The dollar acts as a safe haven. I've just told you that investors love moving money towards where they're going to make the most returns. And the biggest investor in any economy is the government, right? The Fed themselves will have to move money around, right? So if this meeting is not a big deal, nothing will happen. We'll all have a happy Valentine's Day, by the way, right? Nothing will happen on Monday. But if it is a big deal and they do, in their secret closed meeting, decide to immediately increase rates, this is an extremely bearish signal for the market, an extremely bearish signal. Now, again, I've been clear. This was going to happen. We said it was going to happen. It's slowly happening. I don't think this is going to hold, right? It could hold. I don't think it will hold, right? The next key levels to look out for would be this 36 level there, this 38, 36 level. That's kind of like a big deal to the market. And then moment of truth, the 30K. My perspective has always been that we're going back to 30,000 US dollars, and predominantly because I would like to buy partial coins at that level, and then buy 1 or 2 full coins at 20K, and then buy a chunk load at 12, right? So that's what I wish. But right now, in terms of market structure, this is thinning out, and if this holds, the other side of this head and shoulders pattern, or the other side of this downward trend from an all-time high, we are now about 95 days since we hit an all-time high, which is quite significant, right? Which is very bear market-like. And I'm using bear market to refer to a bear market cycle, right? I think Bitcoin is bullish as long as it's above 28,000 US dollars, right? After 28,500, we've got a big problem. Leroy, how do you come up with such numbers? Well, you can do the supply and demand curve. You can find out where 50% is. There's just not enough time to do all these cool things in this particular war room. But that's my take. So please look out for that on Monday. This could just be fear, all right? And then nothing happens. Added to all of this, ladies and gentlemen, and I'm not an expert in defense, all right? I just have a black belt in military jiu-jitsu, and it helps me with nothing to do with war. There is a pending war, and this war looks absolutely serious. Now, serious because it's Putin and Russia, right? And so there's not much to kind of like, you'll be silly to not take it seriously, okay? Let me put it that way. But I don't know. I can't make economic calls on the possibility of a war. I can tell you what I found out. I know for a fact that Biden is doing mass evacuations for any United States citizens in the Ukraine. I can tell you that he's actually said that this is a one-time trip, that they will not be able to come rescue you if you don't get out of the country right now, whenever 2 days ago or a day ago, etc. I can tell you, and that information I know is very credible. I can tell you that I can't say it's credible, the next part that I'm about to say. I can tell you that I saw it in headlines that Biden himself claims he's got confirmation that Russia is going to invade. Now, we don't know if Russia is going to invade, or if they do invade, if it's going to spark a war. We do know that markets are extremely sensitive, and that fear is a problem. Fear in the market equals uncertainty. Now, you guys who come to all these war rooms, you know for a fact that I kept telling you guys, personally, I'm holding my long-term sell on NASDAQ on just one account. Literally, I'm just holding it. And I'm not doing anything else, right? If buying is to happen, I want to see it. I want to be convinced about it. I want to be about this life on the NASDAQ. Until that happens, I'm not adding a single position, right? So I almost took profits on myself when the rally happened. All right, so the rally was a lot of 365 traders were actually in this buy. They bought it about 13,800. I've got a couple of screen grabs. I've got a very new student from Botswana who has to give me updates every Tuesday. Where's 13,800, 1,800? Somewhere here. Was it here? Yeah, somewhere down here. Somewhere down here. Excuse me, who's giving me live updates once a week on Tuesdays to see how much he's made, because he wants to experiment with the holding. And I can guarantee you now that I'm pretty sure money somewhere down here, money is starting to run out, because price is really falling. And the reason why I suspected this was going to happen was, first, it was inflation, which created market uncertainty. Then we had a terrible stocks reading, which I covered. So increased interest rate will strengthen the dollar and government bonds. Yes, absolutely wrong. Exactly like that. And then added to that, for the short-term holder, man, there's so much to talk about. So if you come to Glassnodes here, and you look at the relationship between long-term holders and short-term holders, I'll have to sign in. It's a long thing. For the short-term crypto holder, they're screwed, because whales and long-term investors, like people who really understand the long-term picture, we won't see the need to hide our money in crypto to make money. We're going to put money in the dollar and those government bonds, right? And so in the short term, crypto will fall, right? And the dollar will go up if they increase interest rates. But if they increase interest rates and there is a war, well, then there's even much more bigger need for safe havens, right? So then money needs to be moved around there. But again, with the war, guys, I'm not an expert in wars. I am not an expert in anything. And number one, wars are a terrible thing. Like I told my partner last night, I cannot believe we live in a world where in 2022 we can still kill each other. We can actually go out, and she's like, well, but we live in one of the most violent countries, and she's absolutely right. Like sometimes I forget how unevolved human beings are. A war is, I don't want any war. I'm just talking about markets today. So some of the things I'm going to say, if it sounds like I am pro-war, that is not it at all. Please understand, I am very, very empathetic to what's going on. I absolutely hate that type of violence, but I need to tell you how I think markets are going to react to this kind of stuff. Right. So it became very clear that Nasdaq was going to struggle, just like Bitcoin. The other thing I've been trying to teach you guys, and I bring it up as many times as I can in the public group, all right, is that there is a coupling, a marriage, a oneness between cryptocurrency and the stock market. Now, whether we like it or not, that's just the fact. So I'm going to pull up Bitcoin on one side, and I'm going to leave Nasdaq on the other. And then I'm going to find Bitcoin in the all-time high. Everything that I'm doing is just part of something that I've developed over time called scenario analysis, right? Those of you who are in my course, you will feel it. You will see it in module 3. Scenario analysis, the things you start off with. I basically teach it and break it down the same way I did when I was teaching you guys module 1, right? Scenario analysis is a phenomenal tool. Sorry, I've just messed up my trend line there. Right. So the last time Bitcoin was an all-time high was about the 9th of November, 10th of November. You guys see that? 9th of November, we hit those 60-something, 68, and we're like, oh my God, we're doing it, right? So somewhere up here was our all-time high for Bitcoin. We're doing it. We're definitely going to 100,000, whatever. The last time Nasdaq reached its all-time high was also in November. On the 7th of November, when Bitcoin did this was Nasdaq right here on this side of the trend line, right? Made a tag, then went to make a new all-time high. And then since then, November. A year from now, or this year in November 2022, some of you guys are going to be surprised at a turn-in price when I've told you 3 months, 1 year, 10 years. So please remember this. So if you notice, although the structural movement of the candlesticks is not the same, Bitcoin took a deep dive. Why? Well, because there's less money in Bitcoin compared to the stock market right now, right? There's obviously more money in the stock market because it's been there for long, and the bulls tried to host a fight here. This is them fighting back. They fought back for as long as they could, but eventually price fell. I mean, the biggest dip was on the 28th of December. If we find 28th December on Bitcoin, why is the 50% body 28 December? I don't know if there's anything interesting happening there. There we go. So check this out. So Nasdaq finally gives up just after Christmas and retests the supply of the all-time high and then falls. And I'm like, okay, damn, it's just another daily supply. I honestly said that, last year December, I was like, no, it's not a big deal. We're going to find a demand and we're going to bounce back. It was only when we did not bounce back here, then my thesis changed. I was like, why would Nasdaq break? Honestly speaking, you've just come out of COVID. You almost didn't have, you thought you're not going to have a good Christmas. You're going a good Christmas. FOMC seems very hell-bent on fixing the economy. Why is Nasdaq taking out a daily demand? On the 20th of December, when this rally started, Bitcoin created another strong supply where pretty much price has not been able to recover from. This is important because remember, when we talk crypto, for now, you have to remember that we have to include our brothers and sisters who are retail traders who fundamentally still use caveman technical analysis. So you see where price has come. Price has come back to the supply created on the 28th, 29th of December, which is the supply that sent Nasdaq down. Isn't this nice? It's not random, right? Stuff's coming together. And I'm saying isn't this nice because I was up all night, missed family movie night, just looking at this stuff. And so tonight, I trust and believe I'll be put on handcuffs on that couch and whatever. But it was just fascinating to see this mirror effect, right? So this is an incredible area for price to hold and sell because it really means the couple, stock market and crypto markets, downtrend continues. It is the first time price has come back to retest a synchronized area. Supply here, supply there, 28, 28. First time it's come to retest that. There's a fresh touch, a real dip. We could in Bitcoin, we absolutely could get a quick retest. See price there trying to leave a demand, right? But if we get a deeper retest into the zone, we could get this. Or Monday could happen and then trouble in paradise, and then we get this. Or war could break out on Monday, Tuesday, Wednesday, sometime this week, and we get that, right? So For me, none of these scenarios are case, case in point, extremely bullish for either the stock market or Bitcoin. But again, things like the war, emergency Fed meeting are only happening now. They're only happening now. But our charts through supply and demand have been trying to talk to us since the last financial quarter of 2021, which is why Leroy has been trying to warn you guys that we are in the lost decade and financial crashes are very pliable. Now, not forgetting that a war is a tragic thing, and that's not what I'm talking about when I say what I'm about to say. I want you to know that in terms of economic financing or the actual stock market, most money is made during and strictly straight after a big crash. There's a guy called Adam Koo. I've forgotten the name of the book, but I read the book, Adam Koo books. Right, and the main book is actually inside the remote course as a resource for 365 students. I just haven't read all his books. He got weird the older he got. Man, I'll know it when I see it. But there's a book about how to invest during a crash, and investing during a crash is absolutely a big part of what we need to learn how to do. It's unfortunate that this crash is going to be brought by okay, let's go to the actual our own course, because I know it's somewhere in there, or I hope it's in there. Maybe I'm thinking I put it in and I didn't. Adam Koo, it's not. Okay, I'll find it and I'll send it to you guys. For some reason, I just can't remember the title. One Good Trade, Mark Available, all these books, guys. These are just kind of like your go-to trading books. You have to kind of like read them as soon as possible. All right, cool. I apologize. It's not in the remote course. I'll find it and I'll put it up there. But there's a very good book about this kind of stuff, right? Market psychology and why most billionaires and millionaires in the world are always made after a crisis. Take 2020, that market recovery. If you had bought in 2020, 0.01, $100 on NASDAQ, and you're still holding right now, your life is fundamentally different. I can tell you right now with 0.01. Had you bought equally across different assets, including Bitcoin, like I told many people to buy, including oil, all risky assets, in 2 years' time, if you're not a millionaire, you're guaranteed you're a millionaire right now. 2 years being a millionaire is better than waiting for your 65-year-old retirement of 1 million rands, all right, which is 60,000 US dollars. That's the power of financial markets and timing the market correctly. I have no faith in NASDAQ holding. Right, so those of you who bought down here, see there, 1800, right? A lot of you are the ones who have been in chat with me privately somewhere here. I'm praying for you, because I think I said, look, you don't want to lose, right? But we didn't take profits, etc. Wanted to see what was going to happen. I'm really praying for you, because those of you who are here at 1400, which is where I told you guys to lock profits, right? You might get tagged. I know there's a layer of 365 students who want to buy at 14100, which is there. I used to be one of those people, but my commitment to my commitment to fundamentally, how do I put this? My commitment to the financial crash is so much stronger. My commitment to markets crashing right now is so much, especially with with the crisis, the war, the this, the that. So when you are stuck with a buy profile asset like NASDAQ, just do the basics. Go to your governing time frame and just soberly accept that if markets could and would have their way, what would you do? How far would it go? Forget about the buy profile. Forget about the fact that all we've done with Nasdaq and made lots of money is through buying, like we've done in the academy. If we wanted to truly know, okay, fine, where is this thing going? We know that as soon as we get a bearish engulfing pattern, guys, especially on a big time frame, it smells like danger. All right, look at this red candle. There are times when Nasdaq will give us red months, but it's not a bearish engulfing pattern. It actually is a bullish PCP, right? So we move on. PCP. This is very different. I'll show you the last time it happened. You see there, COVID, right? Nice long drop. This was incredibly long. Why am I saying this? Because if you look at these two candles and just think, ah, man, it's just 2 months of a drop, you almost can make the mistake of forgetting that 2 months of COVID reaction before the March correction took out gains of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 months, 13 months. Took out a year's worth of gain. The stock market is all about holding. If you have an asset that can use 2 months to wipe out your positions in a year, you have a problem. And if you just joined the stock market in 2019 and started buying and dollar cost averaging, you got wiped out. Like, there is just no other way to look at it. All your trading positions got liquidated. And so it's a very, very, very big and important thing to really consider. Absolutely consider the fact that Nasdaq could fall. Consider that I've told you guys many times that we want to see, not we want to, but if we gross over a 20% drop, which is what's happening here, right? You can literally see we're on 18% 3 war rooms ago, and now price is dropping a little bit further. As price continues to drop, this is called the market inefficiency. This candlestick must feel this wick, and it's filling the wick in the downward direction. Now, could this hold? Maybe, probably. The problem is all the demand stuck inside this channel act as bus stops. They don't act as trajectory points where price can then go back to the moon, right? The price can stop here and we get a bounce, we get some type of recovery, we get a base, we get a sense of being. But price could also then break this demand to seek a lower demand in the channel or where the channel started. In technical analysis, when I'm looking at the daily time frame, let's go to AUD USD. I mapped this trade idea out for you guys. I don't know how many war rooms ago, right? So we said, look, man, we're going to sell here. And then we got triggered on Thursday or Friday. I honestly can't remember, right? But this is what's happening, right? From this trade. We're in this trade. Those of you who are in the trade, we're making money from this trade. Hip hip hooray. If you go to the 1 hour time frame, I just want to show you an example of what I mean. And I start to look at a trend line and I'm trying to figure stuff out. Right, I'm trying to figure stuff out. I might have to power. I'm gonna have to switch on quickly my real account just to see what it looks like on the real account. But I'm pretty sure I've got a trend line that looks like this. I drew it on the 1 hour time frame. I don't know if I like this one. Why does this look too real? I think it's like this, to be honest with you. It could be something like this. I don't know. All right, let me just quickly try and switch on my broker's account so I just see what's happening. Right, my point is, let's go with example number 2. So let's say this is the trend line that I have on the chart, and I only drew this trend line after it'd been triggered, after price had gone my way, just to see where a potential retracement would be and then where to sell again. So I was trying to find a 15-minute supply that would meet me by a trend line touch. That's what I was doing on Thursday. I don't know, remember if I shared the charts. I didn't put a pending order because when I came back from my walk with the dogs, price had already gone back down, which is the direction I'm in anyways. But if you go to the 15 minutes chart, just real quick, right, inside this entire drop that we got from the daily, and now we're trying to, come on, there we go. You'll see that there's a 15-minute supply right here inside the 1 hour, inside the daily, blah, 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 blah. It has zero confluence with higher time frame order blocks, but I liked it because it made an intersection with my trend line. So I was telling myself that, look, if price comes back there, and I'm bringing this up because it's absolutely important to remember that as soon as you get triggered like this, I would wait a bit, and we waited a bit, and on Monday, I would break even, right? Break even so that this trade is free, and then put a new sell limit order here. In case I get tagged here, I now have 2 good trades that are going to go my direction. So you start to make more money, right? So we talked about this in how to compound and risk assessment inside module 1, but that's what my plan was. But then price turned here. Now, because price turned there, and I see my broker is My broker platform is open. Let me just go to AUD USD. I just want to make sure. Yeah, so okay, fine. I'm correct. This is exactly the trend line I drew. Now, there are going to be many demands on the other side of this trend line. Let me just go back to a better time frame, like 1 hour, so you guys can see for yourselves. There are going to be many demands here, like valid demands. For example, right, something like that there, right? That's one of them. What about this one? Bullish engulfing pattern right there. Okay, there are many of them. There's another one there, right? Maybe there's no clarity here, so we move on. But there, I can see tons of good bullish engulfing patterns that were all broken because they're on the other side of this trend line. This was an upward trend. These were upward momentum demands. But the moment price breaks the trend line structure and the bears take over, those demands are not going to equate to the amount of money coming to sell. They will slow price down. So let's get to clearer candlesticks. Guys, it is a temperature check, man. Are you guys okay? Is my pace okay? Are we learning anything? Is this good? Is this? I know I wrote War Room and then I'm teaching and not people are like, where's the money? Where are we trading? Okay, we're gonna cover that stuff tomorrow. Right. So you'll see, right. So we've removed the noise. So these ones worked internally, right? Internally on this structure. But when it came back for a retest after price had broken the structure, look at the bodies. Right, the bulls were so desperate that the bodies of these candlesticks literally had to close on the other side of the trend line. Literally, look at this red. We're going to use the wicks to get all the buy orders here, but price must close above. Temperature check there. If you know what that means, let me know. Temperature check on the YouTube channel. Am I coming across clear? You guys okay with my pace? Just let me know. Right, and then price broke through that kind of stuff. So I'm bringing this as an example to say, normally, when price is on the other side of a trend line, not all the time, right? You remember there's a Fibonacci level that price can bounce from. But normally, when price on the other side of a trend line like that, it is very difficult for anyone, generally speaking, for enthusiastic buyers to catch the market, right? It's almost like markets need to come back here. And what would be here, ladies and gentlemen? You can't have such a strong recovery after a market crash. And I'm talking about COVID. You can't. I'm not saying this way Nasdaq is. It'll literally be mind-blowing if it ever does come down here. But if it does, I'm going to buy like a crazy person. But you can't have such a strong March 2020 recovery, which created such a beautiful imbalance, and have this entire area so fresh. And if you see, if everything on the end of this channel doesn't hold, the only thing that can catch price is this demand, right? So that's one perspective. If this is like my worst case scenario for Nasdaq, imagine catching this thing at 8.5. Now, as usual, I always sound crazy. People tell me I'm crazy. I don't know what I'm talking about. Nasdaq will never come there. People told me I'm crazy. Bitcoin was never gonna drop below 60,000 after retesting 65,000, and today we're at 40 something thousand. So I'm telling you that markets don't care about your financial situation right now. Markets don't care that you need money today. Markets could not be bothered by that. What markets care about is making sustainable wealth. Wealth is long term. All right. So it's absolutely important that we have our eyes on this. Now, the stoppers in that process are weekly demands. I think weekly demands are fundamentally important, right? Weekly demands make a world difference. For example, Nasdaq right now is flirtatiously, and I did bring this up, that it hasn't actually done a bad job of holding this level, although I would draw this demand like this, right? For me personally, I would draw the weekly demand like that. Having drawn the weekly demand like that, it seems like Nasdaq hasn't arrived at that weekly demand. Personally, that's what I'm thinking. And if you notice, my 20% from the all-time high enters into this weekly demand, into this particular a daily time frame, right? And that's, for me, is actually fundamentally important. So that's what I'm looking at here, that price might actually be heading its way there, and then maybe we can get a few recovery buys, so about 13,300, who knows, right? And if this area doesn't hold, which will be the first weekly demand, the last one was taken out, was smoked with a bearish engulfing pattern. And then this one is price is now creating a new bearish engulfing pattern on the weekly as we speak. So 365 traders, what does our course tell us? It tells us in module 2 that when you see a pattern like that, there's generally always going to be a rush for a retest. So there's a new bearish engulfing pattern here. Yeah, well, Leroy, this is possible in the long term if there's a war, right, or whatever. Okay, guys, I'm not trying to spook anyone. I'm just saying, let's keep it clean. Let's keep our perspectives clean. As traders, we can make money selling and buying. Yes, your head trader hates selling, indices. But as traders, we have to never try to avoid projecting what you want, house, car, lots of money, into what the market should do. Instead, do what the market is doing and then deal with your profits how you please. So don't project that stuff. Don't ignore all these big signs. The last thing that I want to bring to you about is if Russia, which is leading a potential war, which according to the president of the United States has been confirmed, and remember, they could just be creating enough fear. US could, by the way, United States government could be creating substantial fear in the markets to act as if they're actually going to counter Russia and just not. We're going to evacuate our people because bombs are dropping and we're going to send 3,000 troops. I read that number somewhere, etc., 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 just so that Russia thinks twice, right? I don't know about war. I'm not a war expert, but Russia is not part of OPEC. OPEC is like this oil thing. I wish I'd written a lecture plan better so I wouldn't be jumping from one idea to another. But all these things are very connected inside my head. And I'm hoping I'm as clear as I could be. Now, oil. We spoke about oil a lot, comrades. We said oil was going to do the Goldman Sachs level last year of 80 something something, but overall, the target for oil was going to be 100 US dollars. We spoke about that. I don't need to beat the bush about that. What I want to bring to your attention is oil is a multi-billion, blah blah blah, run by small tycoons, like tycoons, the Arabs and some other big countries. These guys create an oil tycoon and its circle. Russia is not part of the oil tycoon, but it's probably the largest consumer and production hub of petroleum. All right, I might be stuffing up those facts, but I know it's top one or top two in the world. And so it is a very big contributor in the oil debate. It is because of Russia that when COVID came in 2020, it wasn't because flights are grounded because of COVID, because of lockdowns, that oil tanked to the negatives. It's because Russia screwed the oil tycoon and said, I am not reducing my supply. I don't know if Ivan is around in the war room tonight, but he did ask me a good question in the public telegram group that why are we seeing negative inventory numbers in oil, but price of oil keeps going up? Because again, just like Bitcoin, when you limit limit the supply, price goes up. So Russia refused to limit the supply. Right, he refused in 2022 to reduce the supply of oil. So what that did was there was too much oil in the market. He did that to screw these people off. Too much oil plus lockdown. So who's buying all that oil if people can't even fly around the world, right? So it was a big problem, and we went to the negatives with oil. Now, if Russia leads to a war, heads to a war, leads a war, starts a war. However, the grammar gurus will want to correct my English right there. Uh, I see oil rushing. I see oil moving as fast as it can to 100 US dollars because of that particular crisis. Now, here's something that I've never told you guys in any of the war rooms. Let's just remove this red line. This red line was a COVID line. And there we go. There's my 100 US dollars just below a break engulfing pattern. You can see this is a very strong governing supply. You can see previously in the past that there has been, substantial distribution, right? One would not make the case of the arrow here. You can't make the case of an arrow. The arrow was slowed down. This is what you want, that zigzag approach, right? Some very clean distribution into that supply, right? So even this trade idea that I gave you guys a long time ago about price coming here for a buy on the daily time frame. Let me just pull that out properly right here. Right, I'm leaving it there for now, but I'm a bit worried about it. I'm hesitant because remember, the reality is, guys, when oil touches 100 and engages in this supply, we are now saying we are doing a daily demand. This is a daily buy, a daily demand versus a monthly supply. That's bloody dangerous. A monthly supply is 100 times stronger than any daily order block. It's very dangerous. What could happen is when the monthly starts to sell, the daily demand might provide a retracement opportunity for price, right? And that's fine. We acknowledge that. So my question to you is, if you take this buy on oil, which might be a very good, well risky trade to buy, do not be greedy. Take profits and get out as soon as you can. I've got a 1:4 perspective, and that 1:4 perspective simply means daily demand back to monthly supply. Because remember, what's about to happen, in my humble opinion, is $100 into monthly supply, fresh touch. Then we're going to get a pullback, and then we're going to come back for a retest. When price comes back here, we'll be liquidated 9 out of 10 times, right? That's my long-term perspective. So if you're taking this buy, make sure you take it once, take money off the table, and then we wait to see. But here's what you don't know, because remember, we're just a trading school. We're not really an economic school, but I try and add these things to your lives. Whenever oil touches $100, which is clearly here, where oil was 112, 110, this range of $100, and let's just go through the charts here in 2008. You see there, 2008 here, right? And that's it. So whenever oil makes $100, when oil goes above $100, and this is historical facts, ladies and gentlemen, my scenario analysis, I promise you, the way I teach it in my module 3, you'll see with the record. It's just that I need to finish the back test and the live trades I'm running. So I'm on 900 and something trades on module 3 stuff. But it seems to me end of Feb, I'll take 3. And if there are 20 trades left in that cluster of 1,000 trades, I'll just stop and release it, because 10 trades won't change the win rate. I never release modules if those modules affect our win rate. So 85% of win rate is good enough for me, right? But I have to back test and use my own money and back it up after behind 1,000 trades. But from what I can tell, economically and historically, when oil is in this area here, let's actually make it neat. Oh my God, I want you guys to get this stuff today. Look at this. This is. I'm gonna draw a rectangle from $100. All of this is $100 and above. All right. This rectangle here is when oil got to the $100 mark and stayed above or touched. Whenever oil is in this area, we have what we call recession. Recession, guys, is a fancy word for market crash, right? A recession, but it speaks deeper. A it's a big change. So let's read the definition. A recession term refers to a significant decline in general economic activity. Now, why this is important is what recessions do, right? You remember 2008. Look at here. Oil in 2008 touches 100, and we know there was a housing crisis in 2008 and everything. All risky assets fell in 2008. If Bitcoin was around, I'm sure it would have dropped as well, all right, in 2008. Right, and for as long as price stayed above here, it fell. When price came back here on May the 11th, you see here, May the 11th, 2011, 2012, 2013. Let's go to something simple like Euro USD, which is the most traded asset in the world. Euro USD is the most traded asset in the world. It's the most lucrative currency. 2011, in this range here, to 2012, right? So 2011, there we go. Supplies, trend line touches, price kept falling. All right. So there's an interesting thing about oil. But now let's be more practical. What does it mean when we're in a recession? Well, it means people with jobs that are not permanent are at risk. They will lose those jobs. Right. It means companies start to fire people because we're in a market recession. We start to see massive retrenchments in the economy. Not only that, does that contribute to unemployment, but we also start to see massive stagnation. So people are actually not being hired for any jobs at all because we're in a recession. When you start to fire people or retrench people and also not hire people, you start to slow down the circulation of money in the economy. Remember, in America, that's currently the problem. Too much money. We pump. We print it. Now, check. Well, when recession comes, that's not going to be a problem. All of a sudden, this NFT, what am I saying? NFTs, is that in my head today? NFP, non-farm payroll numbers, start to look absolutely disgusting. Now, if you looked at the non-farm payroll numbers of the 2008 crisis, which I don't think this thing goes that far back, or if it does, it'll take forever to find. But if you were to look at those non-farm payrolls of 2008, you would be absolutely shocked, right? This is the maximum allowed, unfortunately. You'd be shocked at how bad things were. So things are going to get bad in the economy, and so all that is needed is for oil to get to $100. For those of us who've been long on oil, and then we might start to see a dump of oil. But the economic impact is fuel is expensive. When fuel is expensive, food is expensive. When food is expensive, people want higher wages to catch higher inflation, but most people are losing jobs. So the equation is it's a big mess, right? It's absolutely terrible, right? So recession, oil hits 100, rising yields, potential interest rate on Monday, surprise interest rate, secret meeting interest rate. It might not even happen, but the big question is war, right? And the meeting is so significant because they've never really done a surprise meeting like that until 2015. And in that time, in that crisis, let's quickly look at the DXY in 2015. That's something I forgot to do. At that time, that straight after that meeting, there was an emergency interest hike, emergency interest rate hike. So 2000 and look at that, right? So somewhere in this parabolic push in 2015, somewhere in this parabolic push, 2000, there you go, 14 from here, this big candle there it is, massive interest rate hike, pushing the dollar further up until Donald Trump became president 2-3 years later, and then finally we had a supply creator, right? So strong dollar equals to interest rate hikes. We have not arrived at a DXY supply, so I'm still thinking bulls are in charge. But that's my personal opinion, right? So it's just okay. Hope this helped you. All right, I hope this helped you. I really hope this kind of like made sense. Now let's just talk a few charts. If you're still cool to chill, if you're still cool to hang. I know we normally do 2 hours. I've got about 15 minutes left of our usual time together. If that's fine. Sorry, I was just drinking some water there. All right, so with all of that at the back of our minds, recession, market crash, rising return on yields, meaning crypto might fall, crypto falling to first 36, 38, and then 30,000. And then if we break through 30,000, 20,000 is open. It won't happen overnight, all right? Unless if war happens, then you're going to get massive red candles across the board. What do we do? All right. So you'll see with the fear of war, for example, I personally feel like I was robbed of a beautiful trade, Euro USD, right? Price turned after NFP, which was last week, if I'm not mistaken, whenever NFP was somewhere here, right? And because I am who I am, I waited for the higher sell. And this is in confluence with the weekly, blah, 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 blah. So I could not have been part of this drop. And I'm okay with that, right? I was okay with that anyways at the time of analysis, okay? But it did arrive at a nice, clean golden ratio, all right? So maybe I should have taken a risk on this supply, okay? The problem with taking trades that don't have weekly confluence is you run the risk of being tagged. You absolutely, it's not even something I'm advising you to do. I'm saying be proud of not taking such trades. Because you didn't lose money, you just didn't make money, and you didn't make money on the other chart and the other chart. So that's such is life. But you see, price dropped, but they will sweep for you. So let's say you're right about your analysis, you still got chowed. 9 out of 10, most traders, especially with small accounts, have very tight stop losses. You would have been removed. They would have used you for liquidity. Check on NZD-CAD. Cool. I'll add it as part of the list. I'll start with it because I had actually a set list for today. Right. So you see this, you would have had your stop loss removed. So I'm happy that they did this because I'm not in it, number one. Number two, I now know that they've removed this supply, which is good news. So now we're just waiting to see price rally all the way up there. For price to rally all the way up there, we need some weakness in the dollar, short-term, euro goes up, etc., etc. But with all this war talk, market uncertainty, potential interest rate hike, which I don't know what's going to happen. By the way, Biden was supposed to have now issued executive orders about crypto on the 10th. The White House is absolutely quiet about that right now. We're still waiting on those actual regulations, unless if they're out and I've completely missed them, right? But Biden was supposed to come out with executive orders of how the states was going to deal with crypto. That hasn't happened yet. That's another big problem. A whole lot of market uncertainty. Right. So I'm doing nothing here. I'm going to wait to get tagged and then see if price is going to hold down to these demands. I would love to be part of the sell because everything in the market right now is screaming sell, right? Anything that's risk asset, risk averse, risk involved is very much a sell-based asset. Right. Okay. Welcome to the war room now, ladies and gentlemen. And thank you guys for being patient with me. Fundamentally, most people stick around for me talking that long. I generally registered students, so they already know how I operate. NZD-CAD, I just want to see if I've made notes in my trading journal, the notebook, if I've, because this year I'm also keeping track of when I look at assets, which assets I said, and then, yeah, so we looked at this on War Room 51. That's 2 war rooms ago. And again, you see all risky assets are falling, right? So just like Euro USD, instead of arriving at that supply that we're all waiting for, they fell, right? The one that we got lucky with, and like by luck, I mean, I'm not saying luck per se, but that was at a perfect timing was this USD, AUD USD H4 supply. So it looks like this on daily, it looks like how they've known week to week. But if you just do the daily MTA basic stuff, you'd have seen that there was a beautiful supply there. I just simply used that so I could risk less and get more in risk reward ratio. And markets closed on Friday with a bearish engulfing candle. Now the temptation is real, by the way, to take profits here, and I think that's where I want to take profits because I'm teaching you guys cluster trading, and cluster trading is just get your 1:3 and move on, you know, etc., etc. But if we get a retouch here, right, I would like to run the retouch all the way down. I'll just break even and hold. Even today would be a far much more better, take profit target. If I'm feeling like I don't need money in my account, in my capital, I might even hold today, right, etc., etc. Right? But this relationship is going to be very up and down, because if we get interest rates, if you guys follow Bongi's question in the live feed, if interest rates hikes happen on Monday, the dollar is going to have an incredible reaction to that, and this is just going to plummet, right? Literally, I'm going to have to make the call to drop my TP a little bit lower just to make a little bit more, or just get what I got and be happy with it. But this is what the DXY looks like. You can see the DXY hit an institutional supply on the H4 time frame. All right, I just showed you AUD H4, and I'm showing you a DXY thing. With this interesting thing, do you know what caused this? Right, price rallied in strength here on the 10th of Feb because of CPI. I want you to see how they use news. I wanted to do this last year, go through different news events and show you how they play with your emotions. So this candle, CPI was positive, which gave currency strength. And because, you get the fundamental guys who tell you that that's what it means, and then they don't finish the story because they don't really know it. Where's CPI? I just want to quickly show you CPI this past Thursday, right? If you just read the information that's provided for you, it'll tell you that, look, man, positive means currency is going to be strong, right? 330, right? A change of price of goods and services purchased by the consumer actually greater than the forecast is good for the currency, right? So it was greater. It was 0.6. The forecast was 0.4. But check the trick. Let's go to the 1 hour time frame, number one. Number two, let's come here. What time was the news released? 3:30. So let's go to the 30 minutes time frame. So we're painfully accurate. I want you to see this junk. I want you to see this junk for what it is, because you have to stop being fooled by price. It'll be nice actually if 365 traders, and I have to lead the way. So this year, I want to try and avoid not trading news events. It's very tempting, I know, but if I trade a news event and tell you guys not to trade, I become a hypocrite. So I would advise you for your first year of trading, just sit and forget and avoid the hype. Now, let's look at price here, ladies and gentlemen. Let's look at what they did. This is what the DXY chart looked like on the 30 minutes chart. And we can imagine there's an H4 supply that we already know. The H4 supply existed 10 days before, no, 7 days before. There's a supply there. We know there's a strong supply. We understand. Look at this beautiful distribution. On the 10th of February, when CPI was coming out, because they don't want to say they're lying. I just want to show you what manipulation looks like. CPI, if the CPI is positive for the asset, the currency will be strong. So CPI was positive. This candlestick is showing you what price looked like 30 minutes before the release of data. 30 minutes before. An intraday trader who is good at what they're doing would have been trying to buy here at this daily 30-minute H4 demand after making a couple of arguments like there's price rejection down there. All these weeks mean there's not enough sell power anymore. Price wants to go up. Someone who's done my module 2 would have said, according to market structure, this is now a low, and now this bullish engulfing pattern has created a higher low. So there have been many arguments to start buying there, right? An intraday trader. I want that intraday trader to do more work, more thinking. If CPI is positive, it's good for the currency. You better know to use, if you want to make money from news, right? Because remember, you're using the volatility because price is going to move more pips at a quicker time. So it could have taken you 4 days to make that money on the DXY chart. You're going to make it in 15 minutes. That's all volatility is. But in the next candlestick that we're about to print is the news candlesticks, the 330 candlesticks. Pause. You see that there? So CPI drops and then boom, it's good for the currency. Markets are like, yes, CPI is high, right? CPI is high because consumers are spending, okay, right? But remember the whole story I've just told you. If CPI is high, prices are high. If prices are high, inflation is high. So what market does is called, this is a knee-jerk reaction, right? There is that, yeah, Bokoko, amazing stuff. Prices, inflation, CPI is doing well. But we are not fools. We know there's an institutional supply right up there. So they use CPI at the 30 minutes chart to strengthen the dollar so as to make contact. Who trades news? I did 2 years at Allen Gray, a massive institution. Institutions barely move on news. They track the fluctuations. I told you guys read the adventures of a currency trader. It was made clean and clear there. News is for retail traders because they get that vavavoom, that impact of the market. They get to dance. So they wait for all retail traders here and liquidate them. Why? Valid supply. So the news pushes price up. Pause. This is the news candle. You see this? This is market volatility. Retail traders, let's go in. Some of them bought here 100 lot size, 1,000 lot size, and they buy into a supply. Now, if you follow my teachings, when I talk about my module 2 in the course, when I'm looking at my trader's edge, it is imperative that if you're selling, you are not just selling. Remember, we add steps. You want to sell to a dumb trader. This is what dumb money looks like. Dumb money comes with big body candles into a predetermined and existing area of value where money was already sitting. So there it is. Price makes contact with the supply and it's game over. All on the same day. On the same day by 5. Look at this. Look at this stuff. By 5 o'clock on the same day CPI was released, 5 o'clock on the same day it was good for the currency, price is removed. Now, as a swing trader, which is why I encourage all our students to stick to swing trading for a while, it doesn't bloody matter because our time frame is the daily. It really, we couldn't be bothered. We couldn't be bothered because all CPI did was allow us to retest and reaffirm that upward trend line, and up we went. Inside these smaller time frames, people are dying, right? But markets are slowly steady on. So to me, the dollar looks very propped now, very much propped for a push up. It could be a push up because demands are still in control, daily demands, weekly demands, monthly demands. Could be a push up because of the interest rate hike, etc. Right? So just be mindful of all of that stuff, right? NZD CAD. I'm going to quickly scan the markets now. Somebody asked me to look at NZD-CAD. I'm gonna jump quickly to Saxo. You guys, thank you for rocking with me. Please don't forget to like the video if it's helping you. If you enjoyed it. If you didn't enjoy it and you're like, who the hell is this guy? Feel free to dislike the video. I don't want to control you. I'm just saying it'll be very nice to know that this is worth people's times. But right, so NZD-CAD, right, other side of the trend line, break of market structure, price could not hold up there. Price fell, falling through the roof. Please, guys, in the private Telegram group this week and next week, and as we move forward, bother me for presidential charts. Bother me for presidential charts, okay? Bother me for the 3-month perspective. If you don't want to pay, just let me know. I have it here with me. So I can say, what's the 3-month chart? I might take an hour to see your message, whatever, but when I see it, I'll quickly do it for you, right? You need to get a presidential look on all these things because no crisis, not according to market structure reading, happens overnight, all right? We have to see how the last financial quarter looks. So we'll just do that for fun with the NZD-CAD. I'm not saying there's anything there, but I'm saying it's just something that we all need to be very, very mindful of, right? So NZD-CAD, are we on the 3-month time frame? Okay, yes, we are, right? So this is what it looks like. And it's not that remotely different from the monthly, right? Except for the fact that there is just a couple of ways, right? So I personally think this asset is going to struggle. Like NZD and CAD, I do personally think it's going to struggle to go up. I do think historically it's got a good reputation of doing just that, right? I fundamentally believe that, if this demand doesn't hold, we're in for a big problem, right? But now, based on what was seen, so you see on the 3-month chart, which is actually quite an interesting thing. The candlestick on the 3-month chart is the very first phase of the financial quarter, right? This is January. But remember, 3-month chart means this whole candlestick needs to account for January, February, March. And right now, it's trying to sit on the trend line. It's trying to maintain the bullish picture, right? But if you go to the monthly, we've already crossed under, right? And we've damn well closed under it this January, right? And now in February, we're opening under it. And today's on Monday, we'll be halfway through February. And it looks like we've got a wick here already. So there's a high chance we might close under the trend line. Remember, green candles open at the bottom and close at the top. Now, if that's the case, then, one could start to argue for a further downward push. Whether that downward push is for a unique MTA, right, to find a better daily demand there or not is a different story. This is what the weekly time frame looks like. There's a beautiful, very strong supply there that I clearly have marked out for whatever reason, right? So I would like to take action there, definitely. And buying is very plausible. Remember, I like choosing trades that are very far away. Buying right now is very realistic, right? Buying right now, as you can see, we've got a daily demand marked because at the end of the day, price did make contact with the governing demand. At the end of the day, the one who is in charge is the governor. I like to mark the futuristic trades so I know where to hold. So there's a daily demand here, which is great, which I am not even in, right? If we get a touch into the daily demand there, then yeah, this could be a nice trade. That would be a nice trade, daily demand to daily supply, right? I'm just not in it, right? On the markets closed on Friday, we seem to have closed the markets on Friday with a bearish engulfing pattern, right? It was quite interesting. So I'm going to go to H4 to see what's happening. When I come to H4, this is the picture I have. Massive rejections right here, all right? So strong sell, 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 and then downward PCP drop, right? So this is a possibility. I mean, I can see this happening. I wouldn't be surprised if something like this was to happen and then go up because the bearish engulfing pattern, for the most part, seems to have been engaged. Doesn't look tested on daily, but on H4, it looks like, sell orders have been created to make it work. Right, so you might get a touch there. You might get a buy that might hold there, and then I'll take profit somewhere up there. It's up to you. This is not the type of trade I would want to trade from daily, what's it called? Daily demand into monthly supply, or even that weekly supply up there. I wouldn't hold my buy that long, right? And you actually get a nice 1:3. All right, so you get a nice 1:3 on NZD-CAD. So it's well worth taking a risk. This for me is a cowboy trade though, because of what I just said about the stock market crash. Remember, NZD, everything I'm saying today, guys, and tomorrow, all these trades could go wrong because I don't know if and war and market certainty is going to prevail. If it does, imagine buying NZD. It's a risk-sensitive asset, right? So price might be too negative and price might fall. Or, for example, a war starts, oil might rally to $100, strengthening the CAD short term. And if it strengthens the CAD, NZD CAD is the trade you're trying to sell. You can't sell that anymore because CAD is strong for that time, for that week or whatever it is. So just be very, very careful. If there's a war, my speculation is it'll be like a 3-month conflict, right? 3-month conflict. I just don't see. I just don't see us going through like a Hitler World War type of scenario, personally. But again, I know nothing about wars, right? I love reading historical books. My favorite subject in high school was history, so I just know it from a revolutionary mankind perspective. Sorry, but I don't know. I don't wanna. I wanna put too much stock into my prediction on the war. But this war room is just designed to empower you to make quick decisions by yourself if I'm not around in the course of the next 2 weeks. All right, so that's NZD CAD. I already looked at NASDAQ. I kind of looked at the US 10 chart, and then I looked at Bitcoin. Let's quickly look at the SP 500, which I think is like a very important chart for a lot of people when it comes to the markets and really the heartbeat of the markets. I'm not entirely sure if anyone in the education group actually trades this. I don't really see you guys talk about this a lot, but it's a big chart in the traders war room. Right. So, and remember, you want to trace what's it called? Primary market. So this very much looks like what's happening in NASDAQ, for example, right? Rejections, some type of turning point, then a new supply has been created, which is kind of tested on smaller time frames, not really the big ones. For example, you'll probably see price returning here to this area on the 1-hour time frame, which is good enough. Where I've drawn a line, as you can see, there you go, supply, price comes back, and then price drops, right? You can almost see this from a mile away, right? And if you go to the weekly time frame, which is what I'm more interested in, like weekly, monthly, just to get a gist, right? You'll see it looks exactly like poor NASDAQ, right? Like price hit an all-time high in the stock market in December. So look at that. So NASDAQ fell like in the November period, but remember that date, 28? You guys remember 28 February? From Bitcoin, the week of the 27th of December 2021, 28th February when Bitcoin created that supply. It's 28th of December. I'm saying February. I'm trying to say December. 28th December, SP 500 created the ultimate supply after making an all-time high, and price has been falling ever since. Which then begs the question: what the hell are we looking at here in the stock market, right? This to me looks like a PCP. Could you send a 3-month chart of the SP 500 in the group? Not a problem. I'll do that. Definitely do that. And then if I don't do it, just remind me. But the point is, I really don't mind. I'll definitely do that. Right. So this date here, guys, is quite significant. And we're going to look a year from now and wonder why markets are changing, right? Markets change character here. Made a fresh stab at this old demand. Okay. Right. So we've got a fresh start. And then with 2 months of a rally, and all of a sudden, those rejections are back on the weekly, daily, etc., and potentially pushing, to the downside, right? Now, with indices, I must say, with the 3 months chart, you don't learn much from the presidential. Presidential is very good with currencies. We can just have a look at it right now. And that's because at the end of the day, these indices and stocks in general are buy profile assets, right? So they average out quite profitably. So the 3 months chart really removes a lot of noise, and you'll think it's just always green, 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 green. But this one actually looks interestingly useful, right? Because you get this situation here. So you've got two options, because you can see on the 3 months chart, actually it's useful. I take all that back. Look at this bearish engulfing pattern. Look at the retest. Look at how price had to find some type of base in here, had to come back into this area here, right, before rallying up right now. And then this bearish engulfing pattern then flips sides now and has now become, somewhat of a demand, right, with some clean imbalances going on there. And you would say, no, but price can't. Yeah, price comes back. Doesn't matter. Markets never forget. You have a sweet rally from 2015 all the way to 2019, and in 2020, because of COVID, price came back. And when COVID came, before March rally started, price knew to find these 3-month-old order blocks. Like price comes back, price does not let stuff go, right? So I've got a swing high here and a swing low. Might as well draw a Fibonacci, and you'll see we've got a golden confirmation here. So when I talk to my corporates and say, look, man, I'm gonna disinvest us and take 60% profits on the table right now, and because I said at the end of this video, I'm gonna tell you what I want to do for my portfolio. Every week that goes by, because my assessment of the crisis is getting strengthened and strengthened and strengthened, what I'm doing is I'm building a cash reserve. Like, it's something that you might not be able to do yet because of your financial situation, or you only have enough money to, and that's fine. Your priority to be to continue to dollar invest. That's your priority in the market, right? Dollar invest. The charts that I sent you in that one investors wealth in 3 years club. I have not forgotten about that kind of stuff. Go back to those charts and just keep buying that stuff. Dollar invest. Dollar investing means you don't care what the price is. You don't care if the price is falling. You're just going to keep constantly buying. That's your priority, especially if you've got limited resources. You don't want to time the markets, right? But if you've got extra resources, or you are disciplined, very disciplined, you want to start to create a cash deposit. So a cash deposit is, maybe you keep 60% of your investing funds in cash. So maybe you take profit, but most of you, I don't think, have been long on SP 500 anyway. So you need to create cash reserves. And those cash reserves, you want to have them ready for the day price actually comes here. And then when it does, you want to dump your cash in and then buy the dip. So that's called timing the dip, right? And I don't want to be crude. I honestly don't want to be crude. War is a disgusting thing, but this war is a perfect, generally speaking, when it comes to crisis, it's a perfect buy the dip goat. It's literally a buy the dip moment. It is absolutely manufactured for that. Most money in the world is made at the cusp of a financial crisis. COVID was a buy the dip moment, all right? Because you're so mesmerized by the crisis and the nature of the crisis, a lot of people forget about the opportunity. But there is an interesting area of value here for SP 500. Okay, so that's done. Moving on. Now, Poundcad is one of the assets I wanted to look at. Are you guys good for 15 more minutes? We'll do 15 minutes and then we'll finish these assets tomorrow, because we do have another war room tomorrow. I mean, I know I've done my 2 hours, and man, I thoroughly appreciate you guys. Okay, there's so many notes here. Let's get a fresh approach on Poundcad. I'll look at Poundcad today and whatever I do in 15 minutes. And then if you guys are okay with 15 minutes, I can wrap it up. Or we can just stop now and then start the Forex pairs tomorrow, all right? Okay, someone said yes. All right, so I'll take the 15 minutes. I'll take whatever I can get from you guys, right? So we've got this situation here. I'm on the 3-month chart. I'm gonna see there's been a range, all right, on the 3-month chart, and then can't do much with the range, so I'm gonna move on. All right, I know that price really was leaving a big supply. Price made contact with the demand. Prices now immediate turns, right? Immediate. It's not even just a demand, guys. This is potentially a major turning point. Price is now leaving a demand and going back to a major turning point supply. So that's where we are. All right, cool. So there's a lot of buying momentum. I can see another demand right there on this 3-month chart, right? So the financial quarter in 2009 that has been holding price as price ranges, right? So that's it. Price is leaving, a serious buying area. So now let's go to the governing chart. On the governing chart, we can see that range is, slightly exacerbated, but it's also a little bit clearer. So I can start to do cool things like this. I'm going to draw a demand there, and I'm going to notice that demand is broken, and I'm going to be like, interesting. Then I'm going to draw another demand here, and then I'm going to see that price was sitting on top of a demand, right? Then I'm going to note that I don't like this. All right, I know that this is what the Reserve Bank in the UK pound was doing. There's a Talitha area. Every time you see a range in an asset that you can invest in, like banks can invest in currencies and in stocks, you and I can invest in stocks. Talitha area is always a signal, insider buying. So someone was preparing for the biggest rally of their life, but also weakening this demand. And the biggest rally of this asset happened, and price took off from 2012 all the way to 2015. Then price came back full circle in 2016, and now markets have been struggling to leave. Right? Okay, I get that. I see all of that, but it doesn't change the fact that we've broken a demand and we've landed at a demand, and both these demands are weak, in my humble opinion. Right? One is actually just broken, not even both. One is broken. One is actually broken. What's going on with my mouse? There we go. You ever talk so much to a point where you just feel so hungry? Feel so hungry, man. Right. And my partner told me to eat before because I was gonna do the war room. Then I still have to do the podcast. Today's reading, right? But I'll come back after an hour for that. Right. So there we go. There's the immediate supply. Right. And then you would think the story was price there his supply in 2019. Right. So we're still leaving a demand in 2019. But along the way, believe it or not, well, the governing time frame, markets make contact with the supply. So now the picture is changing because from the big perspective, presidential chart, we are technically in a slow but steady uptrend. But on the governor, there are many things that are, upon like open to negotiation. Markets, this is so ugly. Markets did hit another governing supply right there in March 2021, which reminds me, study your charts, guys. I might have time to do this for you at some point in time, but if I forget to do it for yourselves. Go through all your charts and think about the two biggest crises in the market, the 2008 crisis and the COVID crisis. Find charts like these. You need to know your assets. You need to know what buys during a crisis and what sells during a crisis. Poundcad was not the thing that was selling in that March 2021 crisis recovery. Like all the other risky assets, this thing does not have a V-shaped recovery. Like, look at this. The month of March is this massive big doji going up, going down, and then markets just maintained the range. If anything, when the 1 year take profit came for all those other assets, it created a supply, right? So this asset, when things are slightly bad, might continue to be worse, right? Because CAD will rally based off oil. All right. So just remember that. Right now, prices tagged the supply, fresh touch, and then price dropped. And price is now making its way back, market efficiency. So it's technically trying to make its way back to the supply. That's all I can see on the weekly time frame. I'm gonna start tightening some areas of value that's done there. All right. So that means we can expect a retest of the supply somewhere up here now, reasonable body versus the doji body for the fresh touch. Although, just be mindful. All right, never a good sign because fresh touch retests have happened. And look at this, fresh touch price went all the way up to here. All right, and then price came back, fresh touch, and then break of market structure through the power of the retest, price went lower. So there might not be a lot of sell orders in there, right? Who knows? Be very careful of just that right now. But right now, in the leg that we're in price, markets are making their way up. The daily time frame to find a trade idea, trade signal. Honestly, looks like one of those charts I don't care for. It feels like one of those charts right now that I don't want to do anything in. Right, so you'll see there's a daily supply. I wonder if it's okay, guys. I'm actually feeling, just to be honest, I think I'm going to be too tired to do our podcast tonight. I'll do my best to do it. I don't want to fall off the wagon. Right, look at that. So this daily supply has been tagged several times, and now we've got opposing areas of value that are just sitting right there. Right, it's just danger. This to me is dangerous, right? Because then you've got very eager buyers who think they can break this glass Newton. It is a strong supply, right? But price has come and taken everything that it can from the area, right? And look, there's not even enough volume on a Kinahashi for it to even recognize it, right? So I'm going to assume that price is at a 61.8% retracement area. It's just an assumption. I could be wrong. I'm just going to draw a downward fib just to swing high, swing low. What was that? Why did you do that? Right, let's try that again. So I'm gonna draw a swing high, swing low. Let's quickly correct this Fibonacci. Right, so swing high, swing low. Where's my, yeah, okay, so I'm at, well, perfect, I'm right. Right, so see, there's a golden ratio area, right? So that's why prices struggled to penetrate. But price is going to give in, right? So price is definitely going to give in because of glass effect and the fact that we're just done. There's really not much left in this particular supply, and there's now a daily demand. So because remember, we are leaving a demand from most perspectives, and we are seemingly going back. If you look back on the monthly time frame, we're seemingly trying to go back to the supply. That's what it looks like we're doing right now. There's a supply there. I would be looking for a buy to get back to the supply. Right. So for me to trade US pound CAD, I would need price to remove the supply. Number one, I need the supply to disappear. All right. Hear me out here. Very important. I need the supply to disappear. So we need to revisit this asset next week. Maybe it'll take a week. If this supply disappears, then only then would I trust these areas of buying here. See if there's anything they left for us on the H4 time frame. There is, right? So on the H4 time frame, this whole area is the daily demand. And you'll notice on the H4 time frame inside the daily demand, this was respected, right? Price created a nice low here, and then price created a higher low there, right? So price came in value-based demand, module 2 type of trades, and then price went up, right? Cowboys, you would want to jump in now and assume, and you want to use your own money, right, to break a supply, because buying now is buying into a daily supply. And I completely believe that is absolutely ill advised. So don't do it. So what you want then is to recognize that there needs to be a retest here, maybe, right? Forget about this. And it could happen. Price could bounce there and we could be like, we should have taken that trade. We missed it, right? But then that's just FOMO talking, right? You missed it, sure, but you could have also lost money. So that's one only way to look at it. You didn't lose money, and that's a good thing. So you could assume that there's going to be some friction here. And how this works is if price breaks this current supply inside the daily supply, price is going to want to do this and then retest this bullish engulfment and then explode, right? So that's why I'm saying if you're a cowboy or a high risk trader, and I might, but probably not, right, is that you want to also just look out for that. First, removal of the supply, then this disappears. And then without removing the supply, without testing the engulfment candle, which is better. But remember, engulfment candles can give us two touches, right? You can get a fresh touch and a retouch, right? Then price will then take off from here. I would fundamentally prefer as just a risk averse type of trader to rather wait for price, or not wait rather, because it might never come, but hope that price would be mindful enough to come all the way down there. And then if it does come all the way down there, I am more likely to take the risk of trying to remove the supply, or even better, it removes the supply before coming down. Then I'm definitely of the mindset of making this a long-term swing trade, a very long-term swing trade up until I get to the very beginning of the monthly supply, or even here. This will be a good profit target. Okay, that's for me what I think should happen in pound CAD. Yo, guys, and I failed you guys so much on Monday with placing pending orders. I do apologize. There was not much I could do. Right, so the sell has already happened. Now, I guess maybe we wanted to sell again at the war room, one of the war rooms. I don't know when I say it's sell here. I can see there's a sell that's already happened. I can see there's another bearish engulfing sell, but I don't think it's going to hold now anymore. I think we're done selling. Right, on the daily time frame, this is very much ideal. This is absolutely beautiful. Have a pending order here for fun. Something goes wrong and price tumbles all the way down, that's a beautiful place to buy and then hold that stuff to Timbuktu. But if it doesn't, I've shown you what kind of like risky cowboy trades are in here on the H4 time frame. All right, that's pound CAD. Ladies and gentlemen, I think it'll be wise for me to stop here. I know I just did one chart, technically speaking, but I hope all the information I gave you around markets was absolutely useful, because I won't be coming to those things tomorrow in our normal war rooms. Tomorrow I'll be just flying through stuff. And just so you know, guys, because I don't know, I'm treating markets normally for now. Right now, I don't know means I'm just operating at governing supply, governing demand, golden multiple time frame analysis. I'm not doing anything outside of that until the markets tell me otherwise, right? Bitcoin structurally, it was time to sell. Nasdaq structurally, it was time to sell. I will not be selling or buying according to news headlines. It's absolutely dangerous. The last thing to bring to your attention before we go is I've also, while I was thinking through things, I decided to update our spreadsheet. So everything is in there. Everything is in there of the latest stuff. For those of you who stuck around to the end of the video, this is just to say thank you and a bonus. Just look at this stuff. This is quite. Look, man. When these guys act weird and start to hide information, I always wonder. So COT data comes out on Tuesdays, but we get access to it on Fridays. But you wouldn't believe this. There's some assets where they didn't even give us the data. They're keeping the data. They're like pound USD, Dololo, nothing. There it is there. Legacy committee, blah, 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 blah. Nothing. Right. Well, while that loads, what's going on? Let me refresh. Am I still online? Yes, I am. Right. Pound USD, we don't know. And I tell you why this is an interesting chart to look out for. Because pound USD, if you remember, ADP and NFP in the private group, we were very worried about selling, but that supply held. That supply actually held. There it is here, right? And I wrote to you, in the private Telegram group that look at Euro USD. Euro USD broke its supply. Euro USD, I was absolutely sure it was going to go for the higher sell, but pound USD just kind of like stopped. So I say here, this is a fib area. You can see here, it's written seller's fib level, but we didn't trust the supply because of the arrow, right? The arrow approach, like strong zero distribution into supply. It created a bearish engulfing pattern, but you can see, even if, because I don't want you to say Leroy told me not to sell on pound USD and then pound USD didn't break. Well, you would not have made any money here, if we're being honest with each other. If you took the sell, you haven't made a single real money. Like this 1 day drop was about, I don't know, 73 something pips. If you're a swing trader, your 1:3 has not yet been met. And technically speaking, you're holding the sale because your take profits are somewhere down here, right? So let's not kid each other, or please remember not to kid yourself. You would not have been able to make any money. It's one thing for your trade to be triggered and be in profit. It's a whole other thing to actually make money, because this whole week, prices gone back where? Back into the supply, right? Getting lower and lower. And then in here was a better H4 supply. You can see prices been tagged all the way down. And then now we're waiting to see. So pound USD has been interesting because it's not doing what it's supposed to. It's not mirroring, Euro USD perfectly. And now the data I was waiting for doesn't even come out. They don't bring it out. NZD USD, they didn't bring it out. USD, they didn't bring it out, right? But check out the stuff. We'll talk about this stuff tomorrow. But I've updated 8th of February across all assets, if not most assets. We still have the same stuff going on, very similar patterns of buying and selling in the markets. What's going on? There we go. Right. So AUD, all that stuff is in for 8th February. It's just there. Everything is there. So because we're looking at the dollar and a potential financial crisis, just so I don't repeat myself tomorrow, DXY, have a look at the data. So this is of 8th, right? We're still long. So we were long before CPI, we were long before NFP, we're long, because our structure told us this, right? So it's important, right? Because you're a student and you paid to learn. So I'm hoping you're seeing that the stuff I'm teaching you works. We'll talk about gold tomorrow because I think something interesting is happening there. Let's look at Bitcoin. In the last war room, I told you that this was interesting. Remember, I said I even highlighted for you for the first time in the release of publications of institutional buying of Bitcoin. The first time institutions, these guys, for the first time ever, were net positive on acquiring Bitcoin, which is this. This is literally what we saw, right? So if you check your charts now, Let's go to Bitcoin real quick. Let's go to the 1st of February. Right, there we go. As soon as that, the decision to buy more Bitcoin, right? What am I going to do as smart money? Buy. I want to buy. What am I going to do? I'm going to buy low, bearish engulfing candle. First, strike straight into the trend line, or to create a trend line. Let me show you what I mean. Remember, on the 1st of February, this trend line, uptrend line, does not exist. Look at this, right? We don't know on the 1st of February, we don't know how to draw a trend line. Guys, remember, you can only draw a trend line after 2 touches have occurred. If you don't get 2 touches, you don't know. You don't know. I don't know. Do you know? I can't see anything. I can literally say, this thing's going to fall to 30K, because I don't know that there's a magical line there, because 2 touches haven't occurred. I want you to understand how to use this data. So on the 1st of February, when they're here, all of a sudden, for the first time, they decide to go slightly, guys, slightly. Can you guys see this clearly? You know, on my side, it looks very small, but I hope you guys can see it clearly. Okay, it looks clear now because I made it big. That's 50%, 50.4. It's just a tiny, instead of being on the slightly negative, let's go slightly positive, and that changes the net position. They go 141. This past week, when everyone was thinking Bitcoin is going back to the moon, every single person that I spoke to, thought that this thing now, because it broke a daily supply, yada, 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 Bitcoin, everything's going well. All of a sudden, look at how they catch up. The following week, they reverse the game, and now they are no longer positive, but they're actually minus 300 in their net positions. And look at the from 2 weeks ago, they were minus 34. So they're getting back to these big numbers, right? Minus 300, 500, 300, where Bitcoin is actually, generally speaking, held at a downward trend. Look at the sentiment indicator, right? 350, but now we're back to big 500, which is what's governing. These orders are what are running this current week, right? So Bitcoin fell. That's interesting. Let's look at NASDAQ. NASDAQ, what's your boy doing? Right, on the 1st of Feb, again, I told you guys this, we're on a negative. I highlighted it's the first time, okay, not first time, but first time in a long time, right, since October last year, where we went negative for banks to literally reduce, to cool their longs from 60% to below 50. And then now there's a bit of profit taking, a little bit of adjustment of some sold positions. So they're 53% up. So this is interesting to watch, right? We've still got more money on the table for the upside, which is quite a redeeming quality of NASDAQ. And then, yeah, everything else we'll talk about tomorrow. All right, crude oil, right? Very getting close to that $100 price tag. There we go. We're still very long until we get to that $100, right? So nothing has changed. Look at the hedges. The actual people own oil, right? They are short on oil. It's very important. Remember, commercial positions are people who own the product or will be heavily affected by the price of the product. So oil companies have people like Leroy inside their oil companies who are floor traders for oil. And look at them. They are slowly but surely increasing their sell positions, right? They're preparing to dump this thing, right? So while we are on this side, naturally, because we're holding up until $100 per barrel, at some point in time, this is gonna swallow us. It's gonna swallow us whole. Right, everybody, have a fantastic good night. I think tomorrow I'll talk to actual pairs. Thank you so much for bearing with me. It's been awesome. I enjoyed this. I like getting this stuff out of my head. Thank you for sticking around. Shake my hand one more time. Have a good night. See you tomorrow at 4:30 for our normal week-to-week war room. I really hope this helped, because I know I didn't give out a lot of signals, but I really hope this helped. Have a good night, everybody. Peace. See you tomorrow. Okay, I'm closing the broadcast now. Bye-bye.